we have Elijah Whitehead. He's the founder and creator of My Tech Academy. He's been an educator and a consultant in the crypto and blockchain space for some years now. He's been investing in crypto since 2012, and he's even working on creating his own blockchain technology since 2019. Elijah, how you doing?
I'm doing great, man. Thanks for having me.
Listen, man, you're the perfect person to have on now. Everybody is all over the news talking about this. FTX, one of the huge crypto exchanges, filed for bankruptcy. And they were about to get acquired by Binance or one of those, and they like pulled out. So I'm not really sure what's going on with that. But my question to you is, how is it possible that Sam Bankman lost 94% of his net worth in 24 hours, and one of these companies that was like the poster child of crypto is now basically bankrupt, and some people are even calling it worthless? How is that even possible?
Well, there's so many different angles to approach the whole FTX situation. From the very first thing that I want to start with is that if you've been following me for a long time, or if you've even been in crypto, you always hear people say, not your keys, not your crypto. And what happened is that we had a bubble because of the Fed with interest rates injecting so much liquidity. And a lot of people started investing in things and buying things, and they truly don't even know or understand what they're buying or why crypto was created in the first place. Crypto was designed and created to remove middlemen like FTX from out of the equation, meaning that you need to have a wallet or some type of a cold storage device where you control your private keys so that you can take custody of your crypto so that you don't have to trust exchanges like Binance, Coinbase, or FTX. So now I've been involved in crypto since 2012. Every single cycle, there's an FTX. Back in 2013, there was Mt. Gox. Mt. Gox went bankrupt because they basically were taking custody of people's crypto. They got hacked multiple times. They weren't accounting for it properly, and they ended up having to file bankruptcy. Then it was Quadriga. The CEO ran off with everyone's cryptocurrency. Then it was Bitfinex. Then we have Celsius. Now we have Voyager. Now we have FTX. At a certain point, people have to understand what the technology was created for and how to use the technology properly, meaning that, again, you need to be taking custody of your assets. Now, FTX is not crypto. FTX is a cryptocurrency company. And I hear people going around saying, I told you that crypto thing was a scam. Understand, that's like saying mortgages are a scam because Lehman Brothers and Bear Stearns went bankrupt. Right? Or that's like saying that energy is a scam because Enron, which is one of the largest companies in American history, that was basically a corrupt company and ended up filing bankruptcy because of fraud. They were in the energy market. They ended up filing bankruptcy. That's like saying, energy is a scam. No, FTX is a cryptocurrency company. And the problem with FTX is that, again, crypto is an asset class that you can take custody of it. So what happened is that once their balance sheet was leaked out on June 30th, and people realized that they didn't really actually have the crypto that people put on their exchanges, they didn't have enough to meet the actual depositors' demands in the event that you wanted to withdraw. Because again, effectively what happened with FTX is a bank run happened, but they're not a bank, they're an exchange. Meaning that if I put my crypto there, you have to be able to give me that crypto back. What FTX decided to do was they had a trading arm called Alameda Research. So effectively what they did was they were taking people's crypto and then going over here and try to trade it in the investment arm. Now, that works beautiful and great in the bull market because, see, everyone's a genius when the market's going up. You have NFTs, you have dog coins, you have meme stocks. You have 13-year-olds making $250,000 off of a JPEG. The problem is that then everyone starts drinking the Kool-Aid. Everything goes up, right? The Fed has interest rates at zero, but let's just buy everything, sell everything. Okay, great. So now the market's pumping. Sam Bankman-Fried's a genius. He can do no wrong, right? He's on Forbes magazine, the front page of Forbes magazine. He's the next Warren Buffett. But the thing with leverage, and I got this from Richard Hart, most billionaires and successful men lose their money to three things: ladies, liquor, and leverage. And in this case, he was using a lot of leverage. So now he's using 10x, 50x leverage. That means for every time something goes up $1, you make $50. So again, you look like a genius in the bull market. You can go from being, worth $100 million to being worth 16 billion because, again, you're applying all of that leverage to the upside. But leverage is a double-edged sword. When the market now goes down, Now you took customers' money and you started trading it over at FTX, and now you're losing the money. So then what they decided to do was they were trying to say that they had enough liquidity because they had their own token called FTT. The problem is, think about it like this, right? Let's say I have this iPhone case and I have 32 of them. And I say, this is going to be the collateral back in my company. You and I know that this is just a case. But if one of these
Right.
cases sells for $1 million, I can go and say, I got $32 million of collateral. The problem is that in the event that I need to go and sell this for that $1 million, who's going to buy it for me for $1 million? No one, right? So what was exposed is that most of the collateral that they were saying they had was the actual token that they created out of thin air. Now, the token's use case is simply for you to get discounts on their exchange. So again, they didn't actually have the crypto, meaning that if I put Bitcoin on your exchange or I'll put Ethereum on your exchange, you have to be able to give me that Ethereum in the event that I need it. So again, once this was exposed, that again, they did not have depositors crypto, then what happened is that a run started happening. People immediately start trying to get their crypto out. And I think something like $7 billion flowed out of their company within a matter of 72 hours. So that's what ended up happening here. And it always happens time and time again.
So what I'm hearing from you as the blockchain and crypto expert is FTX shouldn't have existed anyway because of the technology that crypto and blockchain allows you to have. Meaning it shouldn't even existed because if you would have had your keys and you would have had your crypto locked up like you're supposed to have it, you wouldn't have need to put your crypto or blockchain or whatever or your crypto on FTX and Coinbase and all these other platforms. So it sounds like to me. Now go ahead.
Yeah, I want to address that. So in crypto, we have centralized exchanges. Those are exchanges that are controlled and operated by a company. They have a corporate structure, a CEO, employees, et cetera. And then we have DEXs, decentralized exchanges. So the same coins that you can buy on Coinbase or on Binance or FTX, you can buy those same coins on a decentralized exchange like Uniswap or something like SushiSwap or ParaSwap. There's so many other decentralized options that you can go and use. But again, a lot of people don't know these things because the sad thing about this is, and this is something else I want to touch on, is there's a lot of conflicts of interest in financial literacy in general, where on YouTube, a lot of these YouTubers are getting paid from these exchanges, 15, 20, 30% commissions to promote decentralized exchanges. So you have to think about it. If I know that I can make a commission, am I really going to tell you the good thing you should be using that pays me nothing? Or the semi-okay thing that everyone else is talking about? Oh, hey, listen, BitBoy Crypto recommended this. Meet Kevin recommended this. So I'm going to recommend it as well because they're getting paid to do this. And again, I'm not throwing Meet Kevin under the bus, but I made a video about him over a year and a half ago saying no one should listen to him when it comes to crypto. We have to start understanding who is good at real estate, who may be good at credit, who may be good at wholesaling, but that doesn't mean that they're just because they're good at that particular business model that they know about crypto. And I think that what happens sometimes is that we come across people on the internet and they have a large following or a big platform, and we just take everything that they say as gospel. And again, everyone looks like a genius in the bull market. But then now everything flips over. Now they recommended people Celsius, they recommended people Voyager, they recommended people their audience FTX. And now they've made all of the money, but now you've taken the loss. And I think that it's important that we start putting people in the forefront that know what they're talking about. But more importantly, you, the viewer, you have to stop being greedy. See, a lot of these things that happen are functions of greed. Because at the end of the day, this information is out here if you're looking for it. The problem is, again, everyone's so focused on making money. But if you use the technology, like none of my students have this problem. We're all sitting back here laughing because we know that we have ledger devices, we have our cold storage, or even a MetaMask wallet, which is free, which is a desktop mobile. I mean, it's a mobile wallet and a desktop wallet as well. But you control your keys, and you don't have to worry about giving your ownership of your asset to these corporations and these centralized exchanges because they've proven time and time again that not only can they not protect your crypto, but more importantly, they can't protect your data, and that becomes another problem too, where when they get hacked. Now they have your address, they have your email, and this is another way where hackers can exploit you because they have all your personal information at decentralized exchanges.
Yeah, so a lot of these big time investors lost billions of dollars. I mean, we're talking about Kevin O'Leary, BlackRock, Sequoia Capital. A lot of people are calling this like the Enron of crypto or a Bernie Madoff situation or whatever. Are you going to go that far to say that the founders of FTX were on the Bernie Madoff type of time? Like they knew they had a plan on what they were going to do to take the crypto away from the end user and the average user. And all these other companies like Sequoia and all of them that lost money, were they in on it too? Or like, what's going on here, really?
Well, I think, again, you can approach this from multiple angles. The very first angle I want to approach this from is, for years, a lot of Black, founders of companies have been complaining that they can't get funding from VCs. And you'll hear
Right.
VCs say, well, there aren't really a lot of talented Black operators or Black companies or Black innovators. And what we're starting to realize is that many of these quote unquote white or other ethnicities, these founders of companies like WeWork or like FTX, who got billions of dollars in funding, they're not that good at operating and control and managing capital either. So this notion that somehow you can't find Black talent is BS, because I can find a lot of Black people that can lose billions of dollars. That's not hard to
Me
do,
too.
right? So what we're definitely seeing here is that we should no longer accept that as an excuse, because what we've witnessed here throughout this bull market, like I said, even in the stock market, going to WeWork, is that you have these large VC firms and institutional investors who are deploying capital, and clearly they're not doing their due diligence. Because if you did your due diligence on FTX, you'd realize that they didn't have a board. That was problematic. They had FTX US, which was the front-facing company, so therefore they can get US customers, but then they had most of the operation was based out of the Bahamas. Another red flag. And anyone who was doing an ounce of due diligence would have come across that. Another thing we could take away from this is that there's no such thing as smart money. Most of if you look at A16Z, if you look at Sequoia Capital, if you look at BlackRock, look at some of the losses that they've taken. Again, investing in things. It was alleged from the Fortune article that Sam Bankman-Fried was literally playing League of Legends in the middle of a pitch. When he was pitching FTX to people, he was sitting there and people just wrote him a check for $400 million. Now, the CEO, the lady Caroline, she literally knows nothing about trading, but she's running a trading arm in a trading company, and she's saying it out of her own mouth. So there's so many red flags there. But again, when interest rates are at zero, this is what happens. The same thing happened during the dot-com bubble, where you had anything that had a dot-com at the end of it, you could get funding for it. The same thing happened in the crypto space. All you got to do is throw blockchain at the end of it, distributed electric technology, and you're going to find some VC that's going to give you money. What we can take away from this is that, again, the only person who's going to protect you and your money and your finances will be you. Stop listening to these individuals, again, because they have a big platform or because they may be an institutional investor or they have some fancy degree or certification. Financial literacy starts with you. You have to start understanding what you're buying, know what you own and why you own it. Now, when we look at these institutions that lost a lot of money, I am of the mindset that if you look at Sam Bankman-Fried, what really started making people look at him differently recently is he came out and he started aligning himself with the Democrats. And he was the second largest donor to the Democrats for the 2020 midterm elections. And then he started going down and lobbying the government for crypto regulations. And everything that he was asking for regulation base wise was anti-crypto. He wanted to have blacklists and be able to freeze people's addresses. He wanted to basically, if you want to take crypto off an exchange, you have to identify who's the person that you're sending crypto to off of the exchange. Because what he was effectively trying to do was do what JP Morgan did back in the day, where he wanted to corner the crypto market. Because John D. Rockefeller said it best, competition is a sin. So if I can go out here and create a bunch of regulations that make it very, very expensive to do business, that means that you block out competition. And that's effectively what Sam Bankman-Fried was trying to do. And that's why CZ and the rest of the crypto space realized he was trying to lobby against everyone else to draw up legislation to basically kill the crypto market and kill competition where he could corner the market. And that's when everyone started looking into him even deeper, and these things started to get exposed. Now, there are people who are of the mindset, and again, this is the conspiracy theory hat, that he orchestrated this to basically force regulation, because now, I mean, something this big that happens, like what better way to get what you were looking for than to do the very thing that you was lobbying for, right? Like you were lobbying saying that, there's so many problems in crypto, and then you end up being that problem that you was lobbying. And
Yeah,
then when you see the connection, go ahead.
and I would even say too, now that you brought that up, it kind of makes sense. So let's just say hypothetically, he took advantage of a lot of these crypto users and Sequoia and all of them, and he got the crypto stored somewhere else. Let's say he still got billions in crypto stored somewhere else.
Mm-hmm.
And he was the domino that fell. So a lot of these, Kevin O'Leary, BlackRock, because Kevin O'Leary's on TV right now screaming for regulation, right? And now let's say it get regulated 2 years down the line, he can come back out and he's still a billionaire because he got all this crypto that went missing or whatever happened, right? So yeah, he might not be the CEO of a big major exchange, but he still would be filthy rich and benefit from the regulation because he still got a lot of coins or whatever on the back end because he took advantage of a lot of customers and institutionalized investors.
Yeah, you always hear me say this, problem, reaction, solution, right? So those that are in power, what they like to do is they like to create the problem, wait for you to react, and then they come with the solution because they understand that if they just come with the solution immediately, most people will reject it, right? But if I can create the problem and make you beg for regulation, then now I can come in here and do what I wanted to do from the beginning. Again, as I said, I say this time and time again, the future is either going to be centralized or decentralized. When we look at the way that the internet and technology is currently constructed, when you look at Google, when you look at Apple, when you look at Amazon, when you look at Meta, look at how much data and the flow of information and commerce they control. They're like modern day monopolies. And if they want to wake up today and they want to say, okay, that is hate speech and you can't say that, or if they want to freeze your bank accounts, they can do that. And the more we become digital, you're going to learn why decentralization is important. Case in point, look at Kanye West. Whether you agree with the things he is saying or not, the fact that JP Morgan can wake up and say, you know what, we don't want to do business with you because of the things that you're saying, and just basically close his accounts, that's dangerous to live in a world like that. Or
very dangerous.
These social media companies can say, you know what, we don't like the things that you're saying or your belief system, so therefore we're going to shadow ban you or we're going to remove you off of social media. That becomes very, very dangerous, where this is why centralization becomes a problem, because these centralized companies have so much control, which is why we need decentralization. The sad thing is, again, most people don't realize the need for something until it's too late. And the powers that be, again, they see the power of this technology and they're trying to figure out a way to either co-opt it, infiltrate it, or steer it in the direction that they want to, so therefore they can maintain and keep the control that they wanted. It's the same thing with JP Morgan. We had Jamie Dimon come out and he said, if I find any one of my traders trading or investing in Bitcoin, I'm firing them. But then we find out 4 months later, they're actually working with Coinbase and processing and banking for Coinbase with crypto transactions, right?
So I think they also came out and said that if like the funds that they manage for retirement funds, they can invest in Bitcoin or crypto type of assets as well.
Yeah. But you're seeing it all over with these banks now getting involved in custody of crypto. And now it's being rumored that the banks are going to get together and they're going to create regulated exchanges because they'll be able to better, facilitate crypto transactions and storage of crypto than like FTX. So again, when you look at the FTX situation, going back to your original question, it looks like a Trojan horse. Basically, like it was designed to fail so that therefore now they can come in and usher in these regulations. Now, again, I'm of the mindset that, at the end of the day, I believe that we do need some type of regulation in regards to most people are just lazy. They're not going to sit here and read a white paper. They're not going to remember their, 16-word passphrase or, seed phrase for their wallet. They're just not, right? And the way crypto is currently designed, the user experience is very clumsy. So this is why people like to use centralized exchanges, because it's just easier, like Robinhood, go in there, you buy a stock and you leave it there. So that's how people feel. So I think that in an honest and sensible world, having regulated centralized exchanges and also, having the unregulated decentralized world would make sense. If we can get that type of balance where those of us who really know how to use the technology properly can still do our decentralized thing. And those of you who don't can use a centralized regulated exchange.
Yeah, I think that's a good point. But my only thing, basically hearing that is a lot of people are in crypto, and I'm just making. Uh, I don't have any facts to back this up, but all the people that I talk to are in crypto is because it's kind of like anti the banking system. I should be able to. I should be able to make an exchange or make a transaction, and J.P. Morgan or one of these big companies ain't got nothing to do with it. So now, if all these banks and Wells Fargo and all these big companies come in and they're regulating it, we're back to we just did a big circle. We're right back to the same block we was trying to avoid because Jamie Dimon and all these people now they still control the exact thing that we were trying to avoid. So my question to you is, um, with the situation like FTX, and I don't know if this is going to be like a domino effect and take down other competitors or other cryptos and things like that. But do you think FTX as a concept would be is that over, or are they still going to be able to have other startups that come up and say, "Hey, I'm not like Sam. I can do it better. I can create a better exchange." This kind of like how like MySpace, right? MySpace came up, everybody loved it. He sold for $500 million, and then Facebook came, and now they're $100 billion company. It's like the person goes out and they lose or they don't reach their full potential, and then another competitor comes in, the second or third person, and take advantage of the mistakes that the last person made and really build a sustainable business around it. Do you think that is a possibility?
Yeah, well, I look at the crypto space as anti-fragile, meaning that you have these blowups in every cycle, and every time the industry bounces back, it becomes more robust, more dynamic. In hindsight, everyone figures out what the problem was, and they go in and correct it. So, in the case of many of these exchanges, what you're starting to see Binance and other exchanges do is something known as proof of reserves or proof of funds, meaning that because this technology we have is meant to be in the open ledger that everyone can view, many of these exchanges need to adopt a proof of reserves or proof of funds concept where basically, rather than you telling us you have our crypto, we should be able to go pull it up on chain and view and see that you have that type of crypto. And basically, a lot of companies are now starting to do that. CZ just announced that within 30 days. Binance is going to do an audit and basically make it where you can basically, check and view that they have the crypto that they're supposed to have on hand. So that's definitely a great way to go. In regards to will there be another Sam Bankman-Fried, another FTX? Of course. One thing you have to understand is that Ponzi schemes exist for a reason. They've existed now for an extremely long time. Charles Ponzi is famous because, again, people will always believe and drink the Kool-Aid, right? There's another sucker always looking to be fooled. And like I said before, we had Mt. Gox, we had Quadriga, we had FTX, we had Bitfinex. I mean, there's so many exchanges, crypto funds that went belly up. Now, in regards to the contagion, I believe that FTX isn't the only one. I believe that they're like, for example, when Voyager went under and Celsius and BlockFi got in trouble, and they went under. You realize that a lot of these funds, like 3AC Capital, they were one of these large institutional investors, and they ended up, running off with everyone's money and basically having to file bankruptcy. And I believe that what's going to happen next is many of the miners in crypto, especially Bitcoin miners, you're going to start seeing a lot of them go bankrupt as well. The reason being is because they used a lot of debt and leverage to buy the mining equipment, banking on the fact that as long as Bitcoin's above a certain price, then you're profitable. You can mine the Bitcoin. So let's say you're mining one Bitcoin a day. Again, I'm just throwing this number out here. And Bitcoin's trading above, as long as it's above 30,000, you can make a profit from there and also pay off whatever you owe on the mining equipment. Now, once it drops below $30,000, now you're no longer profitable because you're mining Bitcoin at a loss. Because remember, it takes energy to mine Bitcoin, right? And these companies are spending a lot of money mining Bitcoin. So I believe that that's the next domino to fall in crypto. So sadly, I believe that we're definitely going to go lower. Now, with the regulation coming in, and this is why, going back to what I was saying earlier, although regulation and everything's anti-crypto, and I'm anti-regulation. I'm no fool. And I understand that there's trillions of dollars sitting on the sidelines that's not going to touch crypto until we have some sensible regulation. So if you're someone
Right.
that's looking to build wealth, which is why we're all here at the end of the day, most of us are here to make money. Most of us don't give a damn about the technology. If you're here to make money, you have to understand globally, the stock market, all equities combined, are worth well over at the peak of over $100 trillion. Crypto today is worth like 700 billion. It's a baby. So if we want to get to that 10, 15, 20, $30 trillion market cap collectively, we're going to need some type of regulation because pension funds, endowments, they're not touching crypto the way that it's
Yep.
currently set up. And with the whole FTX situation, you're going to see people ask for more in regards to these crypto companies. And what I would say to you and anyone watching this, if you are ever looking at any type of content on social media, you have to always ask yourself, why is this person talking to me? Because everyone has an agenda. What is their angle? What are they trying to sell me? And be very leery of a person who they have an affiliate link for you to click something and buy something, because in most cases, it will benefit them first at your expense. Now, that doesn't mean that there's anything wrong with it if it's a legitimate company or product or service, but please make sure that you're doing your due diligence and understand that there may be other alternatives or options that may be better suited for you versus just putting a dollar in their pocket.
Yeah. So my last question for you is, all right, everybody's beating on the table. Regulation, we need regulation, right? The problem I see with regulation, and it's the same thing with social media. Mark Zuckerberg is doing the same thing. Hey, regulators, regulators. Yeah, because he owns Instagram, Facebook, and WhatsApp. So, of course, if they get regulated, it won't be no new startups that can come up, and he can just take out Snapchat. And if they ban TikTok, he's going to be the king of kings, right? Competing with YouTube.
Yep.
But crypto, and like you said, a lot of people are doing this for money. They're not necessarily doing this for the technology and the blockchain and all of that. I feel like the regulators don't even know enough to regulate something. You see what I'm saying? So they're going to have to lean on the
Mm-hmm.
other experts for expertise, which is why Sam Bankman was trying to lobby his way in there as the expert to come in and say,
Mm-hmm.
oh, no, we don't need this, we need that. So where do we go? How can we regulate something if we don't even have the knowledge and expertise on how to manage it and control it? And we got to rely on the quote unquote person we're regulating in order to create some decent regulation. It's kind of like asking your child, like, hey, I'm going to punish you and I'm going to set these rules, but you make the rules. Well, the child is going to make the rules to where they can come in at any given time, they can eat what they want, and they can go to school whenever they want. So they never really get punished. And you punish all the other kids. So in that situation, how is it even possible to regulate something that none of these senators or the Congress or any of them don't even understand?
Well, I mean, that's just the problem with politics in general. I mean, you come across, politicians who will admit that they passed a bill within a matter of a 70,000 page bill that they didn't even read in a matter of 24 hours, right? Like, I mean, that's politics in a nutshell, right? At the end of the day, most politicians are bought and paid for. They're not there really to do their job. Their job is really to do the job of the elites. They work for the elites. They work for the donors. They work for the lobbyists. They don't really work for us. That's the problem with politics, which is why crypto was created in the first place. Again,
Right.
I'm anti-legislation, I'm anti-regulation, but I understand that whether we're anti it or not, it's going to happen, right? What we
Mm-hmm.
have to do as builders of this technology and users of this technology is, rather than everyone trying to create their own coin to cash in, get together and improve on Bitcoin or Ethereum. Because, see, effectively, that's the problem here. You had people like Charles and Vitalik and Gavin Wood and all these people that were working together at one point on Ethereum, but then because they couldn't get along with each other, or because they realized the potential of making so much money, everyone went out and did their own thing. What we need to be doing is getting together to make the technology so robust, so user friendly, and so decentralized that the regulation don't even matter, right? That's what we need to be focused on doing. But the sad thing is, like I said before, everyone's focused on trying to create their own coin, cash in, and make money. And rather than really focusing on trying to make this technology, answer to the point where every time we have a problem, it gets better. We can solve these things with code. But again, like I said before, I'm not an optimistic person. I'm very pessimistic. And if you go back to the CARES Act, when COVID had happened, the government was already trying to put together a central bank digital currency, a CBDC. It was in the
Yep.
legislation because one of the problems with getting money to people was that they couldn't get it to you fast enough. They had to use your previous tax return information, right? Whereas if everyone had a digital wallet that the government controlled, they could just airdrop the money right into your wallets. And
Right.
China's rolling something out right now with that, with like the whole WeChat and WePay thing that they have. So the sad thing where I'm going with this is that with this regulation is going to come something like a digital wallet, a Fed, a Fed type wallet, a Fed coin that's regulated by the government that the banks can issue. And again, the whole purpose of crypto is we need to create things that can compete with that to give people the alternatives. But when you see stuff like the FTX thing, at the end of the day, it leaves a sour taste in a lot of people's mouth at the end of the day. And that's one of the biggest problems with crypto is that the barrier to entry, right, is so high for some people because most people barely can copy and paste, an email, right? And you're sitting here asking them to have 5 different wallets and 16 different seed phrases. And if you don't put in the address the correct way, you lose all of your crypto or you send it to the wrong address. So I think that we have to focus on trying to make the technology more user-friendly, to make it more affordable and cheaper to send transactions. And I think that these are things that will come over time. I'll leave with this. When we look back, 15, 20 years ago, I remember there was a time where you could not use your home phone and be on the internet at the same time, right? Or
Mm-hmm.
like when you would make a phone call, you had like minutes on your phone and your phone wasn't free until after 9 o'clock, right? You had to wait, call me
Yeah,
after
I
9 when my
remember that.
minutes are free, right? But
Mm-hmm.
over time, as you can see, the technology got better. Cell phones became much more smaller, much cheaper, more efficient to use to the point where like you and I right now, I'm using my cell phone as a webcam. So I believe that over time, crypto will improve. I believe that over time, people will realize where they went wrong and make the technology much better, much more efficient, and much user friendly. The sad thing is that the government may get their hands on it before that, and that becomes the problem.
All right, man. Elijah Whitehead, founder of My Tech Academy. I appreciate you for coming on.